called the top-down analysis. So I'm going to be breaking it down for you guys in the simplest format possible so that you guys can go ahead and adopt this same strategy in your own trading. The top-down analysis, simple and short. You see, the top-down analysis is an approach to the foreign exchange market trading, forex trading, whereby I simply use higher time frames, and this is step-by-step process. I simply use higher time frames to basically identify the general overview of the forex market. You see, this is very important because it allows me to see the overall perspective of the market. Now I am able to understand the trend. What usually affects most forex traders is they are constantly focused on strategies that can only accommodate them on lower time frames. Now, the problem with only trade, and don't get me wrong, I'm not trying to say you can't trade this on a lower time frame. Of course you can, but think about it, guys. If your strategy can only show you what's happening on the lower time frame, if you can only predict what's happening on the lower time frame, what happens when the higher time frame, the overall picture is probably going uptrend or is probably flowing to the north side, and your strategy is telling you to sell? What happens? This is what causes a lot of traders to hit stop losses. When your lower time frame trading strategy or your entries on your lower time frame is telling you to do something different from what the higher time frame is telling you. So for one, the top-down analysis eradicates that. So first of all, your losing rate is going to be very low, right? Because you can see, like you're right 9 out of 10 times because you can see. Top-down analysis allows you to see clearly. You go to see road clearly. So that's number one. You go on a monthly time frame, identify the general overview of the market. Then you come down to the weekly time frame. Now, what I like to do on the weekly time frame is I use the weekly time frame to identify potential chart patterns that are forming in the market. Now, what do I mean by potential chart patterns? For example, if you take a pair like maybe AUD-USD, for example, if AUD-USD is on a monthly time frame is heading south, I would identify that it's heading south. But when I come on the weekly time frame, I will look, okay, is there any chart pattern on the weekly time frame that might be stating that maybe AUD-USD might want to reverse up? Think about it. There can be an inverse head and shoulder. And one thing a lot of traders don't understand about chart patterns on higher time frame is that it holds very strongly, very, very strongly. So imagine if the market is telling you flow south on the monthly, but then on the weekly is showing a reversal pattern. So I need to check on the weekly to ensure the weekly is clear. The weekly needs to be flowing all the way down south with the monthly time frame. And then I come on the daily time frame. Now, what I do on the daily time frame, now guys, I know, don't get me wrong, this video, I'm trying to summarize, the top-down analysis